Stop begging for money, start making it. Let me be brutally clear. You're an AI founder and you're probably broke. A brilliant idea, a groundbreaking algorithm, you think VCs should be lining up to throw money at you. But they're not. Your inbox is empty. Your pitch deck is gathering digital dust. You're close to giving up. Why? You're approaching this all wrong. You think you're selling technology. You're not. You're selling a money-making machine. Investors don't care about your elegant code. We care about one thing: return on investment. Make no mistake, we are in the middle of a historic gold rush. The AI boom hasn't slowed, it's simply gotten more ferocious. As of the third quarter of 2025, the pace of investment is staggering. Money is pouring into the sector at a rate that makes the dot-com bubble look like a quaint tea party. Why? Because the potential returns are astronomical. We've seen early AI companies deliver 100 times returns, even 200 times returns, and every investor on the planet is terrified of missing out on the next big one. This fear of missing out, or FOMO, is a powerful motivator. It's driving valuations sky high and creating a hyper-competitive environment for both founders and funders. However, the nature of the investment is shifting. The era of throwing money at any company with AI in its name is over. The market has matured. Investors have been burned by flashy demos that led to zero revenue. We're smarter now. The capital is concentrating in specific areas. We're seeing a massive influx into what I call practical AI. This means AI that solves a real, painful, and expensive problem for a specific industry. Logistics, healthcare diagnostics, financial fraud detection, specialized enterprise software. Let's talk technology. For a while, investors were obsessed with large language models and generative AI. That was the shiny new toy. Now, in late 2025, the sentiment has evolved. Foundational models are still important, but the investment focus has pivoted to the applications built on top, not a model that can write a poem, an application that cuts a law firm's research time in half, saving them millions a year. Value moved up the stack, from core tech to money-making implementation. The rise of multimodal AI can genuinely understand and integrate text, images, audio sensor data in real time. This is no longer a lab experiment. It's commercial reality. Companies that can analyze satellite imagery, cross-reference financial reports, listen to earnings calls to predict commodity prices are highly valuable. Another area, small AI, edge computing, opens huge opportunities in robotics, autonomous vehicles, secure on-premise enterprise solutions. Investors want proprietary data flywheels. Defensibility comes from unique private data sets that improve with usage. I've seen thousands of pitches. Many of them are from brilliant engineers with technology that is truly impressive. And I turn down almost all of them. Why? Because they forget the most important rule of business. A great product is not a great business. I don't invest in technology. I invest in businesses that use technology to generate cash. Your number one job as a founder seeking capital is to convince me that you have a clear, believable path to profitability. I want to see the roadmap from your current state of burning cash to a future state of printing it. Without that, your pitch is just a science fair project. So what do I look for? Infographic profitability vertical bar, team vertical bar. Defensibility vertical bar. Market fit first, market fit. I need to see evidence that there are actual, breathing customers who are desperate for your solution and are willing to pay for it. I don't want to hear about theoretical markets of billions of people, signed letters of intent, pilot programs, or even better, paying customers. Show me traction. Show me that you've gotten off your butt and sold this thing to someone, anyone. Second, I look at the team. I'm not just betting on the horse, I'm betting on the jockey. I need a founder who understands numbers, who is resilient, who is, frankly, a little bit of a cockroach, someone who will survive no matter what. I also want to see a team with a mix of skills. The tech genius, the sales shark, and the operational master. Defensibility is critical. Your defense could be patents, proprietary data flywheels, exclusive partnerships, or a trusted brand. Every day, founders walk into pitches, commit financial suicide in the first 5 minutes. They make the same stupid, predictable mistakes, and it costs them everything. The number one mistake is overhyping your technology, especially promising artificial general intelligence, AGI. The moment you start talking about creating a conscious, sentient AI, I'm out. It tells me you're a dreamer, not a business person. The second cardinal sin is ignoring data privacy and ethics. In 2025, this isn't a PR issue. It's a massive business liability. If your business model relies on scraping user data without clear consent, or if your algorithm shows any sign of bias, you are a ticking time bomb. Investors see a huge red flag: future lawsuits, regulatory fines, customer backlash. You need a proactive data governance and AI ethics strategy from day one. Don't treat it as an afterthought. Another classic blunder: no clear business model. We'll get 1 million users first, then monetize. That's not a plan. It's a prayer. You need to know exactly who your customer is and exactly how you'll charge them from day one. Finally, no exit plan kills deals. I'm not looking to hold forever. I want a return in 5 to 7 years, IPO or acquisition. Stop trying to be a storyteller. I don't need a hero's journey. I hear sob stories about quitting your job and mortgaging your house. I don't care. Your pitch is not a narrative, it's a verbal contract. It's an argument backed by evidence for financial return. Every slide, every sentence, every number. Start with the problem, make it painful, quantify it. Say, Fortune 500 companies lose an average of $20 million a year in litigation costs due to inefficient document discovery. Our AI cuts that cost by 70%. Present your solution as the obvious answer to that expensive problem. Briefly, touch on your technology. Frame it as benefits, not features. I care that it delivers results in 30 seconds instead of 30 hours. After you've established problem and solution, show traction immediately. Non-negotiable. Users in your pilot program. Growth rate of your waitlist. Testimonials from key industry figures. Finally, your ask needs to be precise. State exactly how much you are raising. State the valuation. State how you will spend every single dollar. 40% for hiring 3 senior engineers, 30% for marketing and customer acquisition, 20% for cloud, 10% for operational overhead. The pitch is just the opening act. The real test comes during the quanda. This is where investors separate the contenders from the pretenders. This is where I find out if you really know your business or if you've just memorized a script. The first rule is to know your numbers cold. Churn rate, gross margin, customer acquisition cost. You must answer instantly and confidently. If you have to look it up, fumble through your notes, or say my CFO handles that, you're dead. The second rule is to answer the question that was asked. Don't deflect or pivot to a talking point. If I ask about your competition, don't tell me you have no competitors. That's the fastest way to lose credibility. Acknowledge your competitors. Respect what they do well. Then clearly articulate your unique defensible advantage. Prepare for the what-if scenarios. What if Google launches a competing product? What if your key engineer quits? What if a new regulation disrupts your market? I ask these questions to test your resilience and strategic thinking. I want to see that you've thought about risks and have contingency plans. A good answer shows you've considered the threats. Finally, don't be afraid to say, I don't know, but I'll find out. It's far better than making something up. Market, product, team, numbers. Be concise. Be direct. Be confident, not arrogant. Remember, this isn't an interrogation. It's a negotiation. Your goal is to build trust and demonstrate that you are a capable, trustworthy steward of my capital. Handle the pressure with grace and command of the facts, and you will earn respect, and possibly a check. Getting that first check, the seed funding, is not the finish line, it's the starting gun. Congratulations, you've just taken on a massive responsibility. This money isn't yours, it's my money, and I expect you to use it to hit specific milestones. Seed Series A, Series B IPO acquisition. This is the brutal reality of the venture capital cycle. Each round is designed to get you to the next, at a higher valuation. Your seed money is for proving product market fit. Your Series A is for scaling the business. Your Series B is for expanding into new markets and achieving dominance. Building long-term investor relationships is paramount. I am not a silent partner. I am your partner. I expect regular, transparent updates. The good, the bad, the ugly. If you're hitting your targets, tell me. If you're facing unexpected headwinds, tell me immediately. Don't hide problems. Monthly update, key metrics, progress against goals, current challenges. You must also understand valuation and dilution. Every time you raise money, You are selling a piece of your company. Make the pie bigger so your smaller slice is worth more. Be strategic. Raising at too high a valuation can be a death trap and lead to down rounds that kill morale. Growth planning is your new full-time job. Be obsessed with the metrics that will unlock your next round of funding. We've covered a lot of ground. Let's distill it down to the core principles, the O'Leary doctrine for AI startup success. First and foremost, remember that you are not in the business of technology. You are in the business of making money. Every decision, every feature, every hire must be justified by its potential to generate a return on investment. Stop being a wide-eyed inventor and become a ruthless operator. Profit is not a dirty word. It's the only word that matters. Do not promise AGI. Do not ignore data ethics and privacy. Do not pitch me without a crystal clear business model or exit strategy. Third, your pitch and your quanda performance are your moments of truth. Know your numbers cold. Be prepared to defend every assumption. Present a case built on evidence and traction, not on stories and dreams. Your job is to de-risk the investment for me. Convince me that giving you my money is the smartest decision I can make. Manage my capital with discipline. Communicate with transparency. Focus relentlessly on milestones and use our expertise. Hit your numbers. This is how you build not just a company, but an empire. The AI revolution is minting new millionaires and billionaires every day. Now stop reading and go execute. Make me some money.